Hello, everyone. Welcome to today's webinar, July 2024. When is the right time to launch my investment crowdfunding campaign? Joined here with Danny Shapouri, with Jazz Parker. It is a business development webinar today. You're going to speak with Danny and Jazz, who they have calls with most of the industry at this point. There's 483 live issuers on King's Crowd at the moment that they're reporting on King's Crowd for Reg CF campaigns. I like to say we've spoken to over half of them, and this is a common question we get. When do I go live? It's July, it's December, look at these market conditions. Should I actually be raising capital? We're going to look to give you the right tools so that you can answer that question today and focus on how you can maximize your marketing, your investor acquisition efforts during that period of time. During that run, we want to make it as successful as possible for you. Danny, you've been doing this since the beginning, 2015 Reg Ds, 2016 Reg CFs and Regulation A plus campaigns. Can you tell a bit about yourself and familiarize the audience with who you are and what you do in this industry?
Yeah, great to meet everyone. Brought in our first Reg D campaign, 2014, 2015 was on Fundable, Free Jobs Act. That's a friend from high school. And that campaign ended up producing 2.8 million. As you guys know, Reg D is all credit investor targeting. From there, they went into a Reg A plus on Start Engine, had Bill Nye Science Guy as their brand ambassador, was raising about 800K a month. We started building relationships with different portals. Everyone was asking who was running the ads. And from that led into a lot more conversations and a lot more raises to work on post the Jobs Act. And commonly asking, when's the best time to run my raise? I do think it's case by case. It's not always a seasonal question. How prepared are you? Do you have a strategy in mind? Do you have a consistent creative in mind? Do you have your whole plan set up to launch? Are your friends and family and their friends and family ready to go, excited? What is your readiness from a strategy standpoint, creative standpoint? Have you audited the offering page? Is your pitch video about the offering or about the product? Are you prepared to know that this is going to be more of a marathon than a sprint historically? But the stronger launch we have, the more success we should have. And from there ongoing, do you have the right partners? That's a big part of it. The portal you're on, the agency. And yeah, I've worked on hundreds of these. Excited to share my experience with you guys and set you guys up for success for your race.
Awesome. Jazz, you want to introduce yourself?
Absolutely. And I want to say before, I'm excited to be here. I've probably watched all of these webinars. And so I think it's one of those surreal moments where, it's like, oh, hey, I'm on this thing now. So Jazz Parker, new addition to the DNA team, but excited and just been talking with a number of issuers who ask somewhat of the same questions of, hey, when's the right time? What do we need? What are the, successful traits needed before we go live? So excited to, jump right in and really just be of service to everybody that's on this chat today.
Awesome. As Jazz mentioned there, this is his first webinar with us. Started early this year, has been bringing in and educating issuers across the board. And, we look to get all of our team members featured here. If you go back through our past webinars, I have over 40 at this point. I think we're crossing the 50 mark here. But Jazz has really excelled, and we hear that from portals, from issuers alike, about the knowledge he's been able to share. So wanted to bring him into the conversation today, have this dynamic all the way through today's discussion. We'll invite one-on-one communication afterwards as well. As you know, every month we create a deck, and our creative director, Brendan, as well with Khalil, our head of content marketing, spend endless hours on bringing these materials to life. We make these available, but would point to them on the video here. When is the right time to launch my equity crowdfunding campaign? Jason, Danny, Jazz, breaking it down for you today. If you're not familiar with us, if this is your first webinar, we've worked on over 400 investor marketing campaigns that have collectively produced 9 figures of capital across content marketing, advertising, and outreach channels. I don't say that as a promotion, but to share what's behind these recommendations. This isn't just something that we read about in a book or something we believe will work. This is what we're physically seeing in the marketplace, both from our campaigns as well as the research that we do on platforms like King's Crowd and Crowdfund Capital Advisors, where we're able to see live Reg CF campaigns, Regulation A+ campaigns. They don't ask me to do it, but that is a shout out for those guys. They are champions in the space and getting investors the data they need to be able to build their portfolios. And as issuers, as agencies that work with issuers, we want to be constantly looking at the numbers. Only way to measure. The importance of timing and equity crowdfunding. A strong launch is more important than waiting for the perfect time. Time in the market is more important and more realistic than timing the market, is what they say in the world of portfolio management, whether you're looking at investors, venture capitalists. This is different than a reward crowdfunding campaign. Indiegogo, Kickstarter, you're limited to 30 days. You get a full year on these filings. There's extensions. There are all types of things you can do to even go beyond that. Many of the portals, the FINRA regulated portals that these deals live on, will give you 3 months, and then gauge where you're at. Potentially you can get extensions from there. The self-publishing tools, the tech platforms. When I say portals, referring to Start Engine, WeFund, Republic, Net Capital. There's a list of over 90 of them. They're all great in their own right. King's Crowd, you can see which ones are moving the most at any given time. Start Engine, WeFunder being the top 2. The tech platforms, Dealmaker, Dalmore, Issuance, T0, Core Connects in association with broker dealers, North Capital, a variety of different platforms that you can use to do this and be live for longer and go through all different points of the calendar year. We've had concerns from issuers, hey, the holidays are coming up, hey, investors are on vacation, and have seen top raises occur during those different chapters. 2020, year of question marks for the industry that ended up turning into growth. And, month over month, we were seeing stronger results. December of 2020 was the top month of Reg CF in the industry at that point to date. We've seen similar types of December since, and outside of, other peak months, 2021, it was similar outside of March and April. March and April, the extension from 1.07 addition from 1.07 to 5 million on Reg CF. Had a lot of issuers relaunch, and outside of those months, so they were leading periods of time. So it's more about what you're doing when you're live versus when you should go live. Going to speak about that further. Danny, when we're talking about a strong launch being the top priority and it's about time in the market rather than timing the market, what would you like to add there based on the thousands of conversations you've had with literally thousands of issuers to date?
Yeah, one comes to mind. We had a strong campaign on WeFunder, launched with 500K from their internal audience. What is that? $1 million the following week with ads. I will say that as a top converting campaign. They're not always at that level, but it just speaks loudly to the audience that's on the portal, doesn't know you, the ones we're targeting with ads. So having a strong launch says everything. It's third-party validation, shows consistency, shows that this is something that I want to get involved with. Gets people excited, the FOMO side of it, because you can only raise so much in these filings. So having a strong launch can be a make or break these campaigns. So it's very important that you have all your T's crossed, your I's dotted. You're going in there confident that you're going to have that strong launch.
Excellent. Excellent. Jazz, anything to add to that based on some of the conversations you're having right now around the planning side of things?
Absolutely. I think one of the biggest things that I see is social capital, like already building these social audiences and gearing them and preparing them for what's to come. When you guys are in that pre-launch phase, as well as once you guys are live, like this is in this new age that we're living in, it's becoming one of the strongest ways in order to build community, in order to not only do these raises over time, but like to be able to just garner a community and actionize them towards some of the initiatives that you have. So if you guys are already building a community of, let's say, 5 to 10,000 people who love you, love the product, and love the mission that you're on, I think just gearing them up and preparing them for what's to come is grade A. So that's what I would love to add.
I am so happy you mentioned that, because that's where the focus really is. You know, you're going live, you're talking about the time of year, but really what's happening day one, what's happening week one, what foundation are you building that first month to hit your full goal? Because, you know, I mentioned reward crowdfunding, Kickstarter, and Indiegogo campaigns, those that run on 30 days, you needed to hit a third of your goal in the first 24 hours. Or there's 70 to 80% chance you were not going to hit that goal. I think the statistics are even worse for reward crowdfunding today. Equity crowdfunding, you have that longer period of time, but it's still the same fundamentals at play. 3 months, even 12 months. If we're driving audiences as your advertising partner to a deal that has $20,000 raised, it's going to statistically produce a lower conversion rate than the same offering, but with $120,000 raised, or 220, or 520, or $1,020,000, or 2,020,000. We are anticipating higher and higher in conversion rates all the way through. So if I am asked about, you know, timing, more time allows for more marketing. So you know, we're going to get back to pre-launch and speak about that further. But as Jazz mentioned, far more interested in what's happening and if that extra time allows for more audience building compliantly. But you know, time of year, you want to figure out how you can piggyback on messaging, on marketing that's occurring during those stages. And there's pros and cons to each stage. Black Friday, as an example, is the busiest day on the internet of the year, the day after Thanksgiving. And it's more expensive to bid on advertising at that point. Investors typically, you know, don't speak with, you know, private companies that, you know, they're looking to purchase equity from on that day. Meanwhile, we've seen numbers off the charts in terms of how many conversions occur and really been able to leverage how many people are online. Does the time of year affect the launch? Danny, I know we've spoken about this a bit, but what are we looking at this page here, and what does it mean to you based on the campaigns that you've been directly a part of?
I think it's case by case. Like you said, holidays can be hit or miss. If your friends and family are in town or they need to they need to spend a certain amount before that year ends, it could be the best time to launch your campaign. A lot of them are out of town. It could be a lot more difficult. I've seen campaigns struggle. As Jason mentions, it can be a little more competitive on the advertising side. I've seen the strongest launches at that time too. So it's really going to be case by case to your internal audience. I've had clients reach out to friends they haven't talked to for 30 years, not let them get off the phone, not let them till they invested. There's networking events. If you don't have a community, there's a lot you can do. If you, what I commonly hear is, oh, my friend's already invested. They're not going to invest in this round. There are ways to create that. So you're not just relying on that. You can get out there and create that before you launch.
So want to echo that. It's more, as we're saying about what you're doing versus when you're doing it. And as part of that discussion, how are you bringing in your first degree audience, your first degree network, friends, family? I know some of the people that Danny's talking about that said they were getting in touch with people they went to college with 30 years before. And, you know, we see investors participate multiple times. We see advertising and marketing channels, uh, see those, friends, family that have already bought in, participate again. So if you and your community are ready to go, then why wait? It's about your business traction, hype around your product, uh, and your audience. You don't have to wait till after the holidays. During holidays, ad spend will be greater due to more competition, but that doesn't mean you can't be successful. As I was mentioning, there's plenty of holiday creative and messaging that you could set up. Um, Jazz, how do we raise expectations? We'll often hear prospective issuers who are not yet live say, "Hey, I want to raise $5 million on a Reg CF, and I want to do so in 2 months, 3 months." Which do you think's better, 2 or 3 months? When we know as of July 1st, 2024, there were only two issuers that hit the full $5 million in 2024. Last year, 2023, 11, according to King's Crowd, of the 1,434 issuers. That I don't say that to discourage as much as, plan accordingly and figure out where your traffic sources are coming from. But how do you set expectations for an issuer that's preparing to go live?
One, I want to say that's a great question. And I think that when I'm talking to these issuers, it is looking at this data and being truthful with them, right? So looking at some of the data, seeing how many raises actually met the $5 million mark, how many raises in that whatever month it was, like how many of those met the 100K mark, like, and looking at the numbers, understanding that they are so skewed. I think that setting the expectations not only with the amount that they're trying to raise, but with the timing that they're allowing their campaign to run, as well as their budgeting and some of their expectations is number one, right? And so I just feel like if we, as people in this space, we're looked at as thought leaders. I think we have to be honest with issuers as much as possible. And so that's my main focus. Like, I want to help them reach those goals. And I also want to be honest with them and letting them know that, hey, the first 100K is an uphill battle, right? There's so many of these different benchmarks to talk about where I believe that if we don't set the right expectations, 3, 6 months down the line, we're looking at issuers who are now mad at us because maybe we told them, hey, we can get you $1 million in the next month, right? And it's just not truthful. And so when I'm on these conversations, I know Danny does as well. We want to set the expectations, looking at it from an analytical standpoint and saying, hey, this is what the landscape has been thus far. Um, we're going to work with you to get you to where you want to be, but we just want to make sure that we're being honest and truthful in terms of how long and what it's going to take to be there.
Absolutely. And it's true. If we set the wrong perspective out of the gate, if agencies, if portals are only talking about their wins and their top campaigns and not, the broader landscape, it could set the wrong hope, expectations, and lead to much more difficult conversations in the future. It's tougher to make those productive if a group was expecting $50 million because someone had worked on a campaign like that before. So I encourage everybody to go on a King's Crowdfund Capital Advisors, to look at the weekly reports, to look at the monthly reports, to go into the advanced search and see by amount raised and sorting for live campaigns, for past campaigns, the actuals. And 90% of campaigns are doing less than 6 figures a month. I find it's usually about 130K a month that the top 10% of issuers are at. I believe it'll be about 115K for the month of July 2024 here. We're at July 31st. That's what I'm expecting when looking at the results tomorrow or during our Monday audits. Issuers need to understand that it's unlikely they'll raise their max goal in 2 to 3 months. We just talked about, how many issuers actually do. Less than 1% of all Reg CF issuers since 2021 have raised 5 million. I believe it was 0.76% hit the full 5 million in 2023. Again, it's very possible that you can, but you have to follow the same formulas that other issuers have. And you can look at case studies for your time of year. You could look at other issuers who have gone live at the same time as you. That is the focus of today's conversations. And success leaves clues. So being able to talk about competitor marketing audits and what advertising channels the top issuers were using, who's talking about them in the news, what they were sending out as their email marketing, what webinars they're doing, what conferences they're speaking at. I would pay far more attention to detail in what they did versus how much they raised to get there. I mean, there's a chance they closed it with a few friends and just happened to use this vehicle. So, or used their existing audience. They had a 5 million person audience and got 5,000 people to invest off of it, which is great. But if you don't have that, just looking at how much was produced isn't going to do it for you. Can look at the breakdowns of some of these percentages. Actually, Danny, you want to talk about this a little bit and the accuracies that you see and how this is the reality and this is how groups should be looking at what's possible and more importantly, what they could do to be in the bottom portion of this pyramid?
Yeah. Most importantly, these are commonly more marathons than sprints. There's slow months, there's great months. I commonly see that on good campaigns. It's rarely consistent. There are some consistent campaigns. We commonly, see stats 50,000 visits with an average 2% conversion rate with an average 1,000 average investment amount per $1 million raised. That's the estimated amount with an average converting campaign that we commonly see. And it doesn't mean it just has to come from ads. It can be multiple sources, but that is the algorithm. Having a strong launch is going to set you up to be in the higher tiers statistically. As Jason mentioned, for sending traffic to 30K raised campaign versus one that's at 300K, we're going to see a significant difference. And the reason why friends and family are so important, they're investing in you. They're not just looking at what's raised, the terms. That's not going to matter to them as much. Where the traffic we're driving, they don't know you. They're going to look at that as an indicator of their comfort in investing and your readiness to reach these levels of success. So, and I commonly see clients say they're going to wait to hit a certain level to invest. I would advise to have a budget beforehand. Don't wait till you hit that level and then can pull out and reinvest. They call it a rolling close. You're giving yourself a lot more risk to hit that, and commonly it may not happen. So not having a budget beforehand is going to make that a lot more difficult. And just knowing that you got to do everything you can on top of whoever you're working with. They're investing in you. The founder is more campaign facing, tend to see much higher results. We have a client, Adam Beam, sends us update videos every couple of weeks of different stuff they're doing, different partnerships he's creating. We put that in the retargeting audience. He's created himself as a thought leader of the brand, and people are resonating with him. He continues to market in between raises. He doesn't stop. Commonly, when issuers stop in between raises, there's a lot of question marks, what you've done with the previous raise. So consistent content, consistent movement, knowing it's more of a marathon than a sprint historically.
Yeah. So what Danny's really highlighting here is it's the amount of traffic that you're driving. We could almost project that the groups that don't raise over 100K are sending minimal amounts of investors to their offering page. The groups that are at higher levels, just based off marketing best practices, are sending a lot more. No one's getting 100% conversion rate of their audience that they're bringing to that offering page, at least not at scale. So being able to look at those type of breakdowns, being able to to figure out how those traffic sources are going to come in is really where you should be centered, especially on those time of year discussions. So, Danny was mentioning a few pages ahead here, but Live Raise needs approximately 50,000 unique visitors per every $1 million raised on a Reg CF campaign per industry average conversion rate. Now, those are rounded numbers a bit. King's Crowd said around $1,100 was the average Reg CF investment for 2023. We're rounding that down to $1,000. Self-publishing campaigns, the average investment could be around 3,000 on a portal, 500 to 1,000. I think 1,000 is a good number, healthy, conservative to look at. Conversion rate, 2% conversion rate, and actually have this broken down here. It is what we're talking about. We're showing a dollar cost per click just to paint a picture of how much that traffic could cost. But it's all contingent on that conversion rate. That's the most important metric here. If your page is converting and you send this much traffic there, you're going to be in a good place, potentially higher. If your page is not converting, you could send millions of people there and it's going to have minimal output. So 50,000 visits, 1,000 investments, $1,000 average each, $1 million. Could you get a 3 to 5% conversion rate? Sure. Tougher to do. Some top campaigns do it. I've seen higher. You could be effective at a 1% conversion rate. You just need to send a lot more traffic there. And, improving the offering page is different for many platforms. But if you have the ability, conversion rate optimization is an ongoing effort. Many platforms allow for portal updates, offering page updates. That could be where you want to focus time. But higher average investment value as well too. Let's say you're getting $5,000 as your average investment across 1,000 investors. $5,000 is very high, unless you have a high minimum and just a lot of investors participating at higher levels. But that could get you $5 million at with this amount of traffic. But the picture we're trying to paint here is you need a whole lot of traffic, relatively speaking, to produce the necessary amount of conversions to substantiate your goal. Key indicators for campaign readiness. Jazz, what tells you that an issuer is prepared to go live?
Well, I know Danny and I always talk about this, but a strong pre-launch, right? So always looking at how many people in your pre-existing audiences are going to be coming into the raise ready to invest, like Danny says, and we've heard him say it on this call, where we see issuers who are on the phone with their friends and family, like making sure that they are hitting these quote unquote like levels. So this first 100K is one of the most important things that we've seen, right? We can drive as much investors as we want to an offering page, but what we also see is these investors are going to want to see some traction as well. So I think the first 100K is extremely important. A strategy to get traffic. Once you have this 100K goal, or excuse me, once you've met these 100K metrics, being able to drive as much traffic to that offering page, showing them the momentum that you guys are building, right? It just creates more of a reason for them to want to be a part of what you guys are building. Simplifying the message. I think that a lot of the times we can complicate our offerings, but how can we communicate to investors, hey, not about the product, not about the features, not about gadgets, anything of that nature, but how can we communicate the opportunity that they're going to miss out on or be a part of if they choose to invest? For me, those are like three of the biggest check marks that I look for when I'm talking to issuers. I know we also talk about the pitch video, which is extremely important in saying that how can we communicate this offering, this opportunity to investors in a video format. So these are just some of the things that come to my mind. But that's what I would say for me are like the top three that I'm always asking and looking for.
Well said. Well said. So this page really says it all and recaps what Jazz was putting down there. Simplified message, strategy. We see a lot of groups that want to dip their toe in the water and don't really have a full plan mapped out. Going live and getting 6 figures to show up on that offering page. That extra digit really goes a long way, and you'll surpass 50% of other issuers. Allocated budget, kind of, do, right? I don't tell every group that they should use regulated investment crowdfunding, but if you are going to leverage these vehicles, you absolutely need to market and should have a budget put forth aside that, even if it's just what you're spending internally on ads and having your team manage it. I highly recommend it. Legal audit, brand assets, social presence, third-party validation, all should be prepared ahead of time. So the strategy is what we're going to focus on next here. I mentioned that word. Danny, why is a plan so important for these capital raises? Why can't a group just send out an email to, 1 million people and expect to close their round, or test ads and as it's working, do more? Why should a strategy be developed before physically going live on the platform or starting a new marketing campaign?
Yeah, I'll start out with a few quotes here. If you don't plan, you plan to fail. If you don't build a building without the floor plan, you're able to identify potential holes beforehand. You can make sure your messaging is tightened up. If you're working with an agency, you can make sure you're aligned with that group. If we're just spending a week launching ads, we're not going to go 4 weeks deep, really diving deep into the full strategy, syncing our teams at higher levels, finding any potential holes before we go live. Campaigns are super public. So we're able to identify something before it happens in the strategy phase. We're much better off together. We can dial in projections so we know if we're on target or not, if the offering page is converting at the level we want to see. What are the competitors doing? Not from 2 years ago, now. What is the industry, your industry, what are they, what type of investments are they seeing on other portals? What's the industry analysis, micro and a macro? This lets us be more analytical. When I commonly speak to issuers and they're not seeing the levels they wanted to, their common theme is they wish they planned it out, wish they had a better idea what they're getting into before they went live. So this gives you the ability to do that. You don't want to rush into your offering. Like I said, you want your T's crossed, your I's dotted. You want to feel confident that you're ready to go. You're going to have that strong launch, and you're personally ready to go all in on this.
Exactly. And I can't tell you how many issuers I've spoken to, Danny's talked to, that put off their launch date for time of year. Maybe it's for the right reasons. Cool. Go live when you're ready. For us, ready is more around that audience. It's more around that checklist we just looked at. But then they launch and they don't have a strategy. And they waited till March, or they waited till September, or whatever it is. We see a lot of rush launches in October and November, trying to get things up before the end of the year. And they could have utilized that period of time by putting together a thorough roadmap of where they're going to hit their goal. I mean, you're essentially trying to produce millions of dollars of e-commerce sales in a month, in a few months, even in a year. You should have a plan to do that. I mean, this is the sale of securities on a digital platform. It's not, hey, a few investors putting in, large amounts of funds. And even if it is, even if it's a Regulation D, a 506C campaign that's allows for solicitation to accredited investors and carries a higher minimum, it's a lead generation marketing campaign and a lot of follow-ups, a lot of nurturing with digital channels to showcase momentum, to get those audiences to participate. So why launch without a marketing plan? Why not have an understanding of what's occurring in 2 to 3 industries, one of them being investment crowdfunding? Why not have a competitor marketing audit and understand exactly what other groups are doing in the space that are targeting your investors, your investors that have participated, your target markets, that they're going to see these ads for these other groups, and then mapping out the exact audiences that you want to hit, variants of those, preparing for the data to show you what's working best, the channel strategy, the touch points of those audiences based on what other groups are doing in the space. This is all in sequence, of course. The creative, the content marketing, to predetermine what you're going to speak about that's headline worthy in terms of announcements that are distributed weekly, the partnerships that can accelerate the visibility of your content or bring in large pools of your target audience, retail investors, credit investors, vertical specific, geographically targeted, potentially the projections, what you're looking to see each month, not just results, but impressions, clicks, conversions for each channel. You could identify where performance is falling off. If any of those channels are underproducing, you could pinpoint key drivers and ramp those up quicker. We always have assumptions going into a campaign. We need the data to show us what's working. So without these projections, you're kind of just shooting in the dark and determining what to do from there. And campaigns may be performing better than you realize. And then activation, page, 2 pages, recapping the whole process. We spend a month on this. We do 2 sections a week. That is the timeline that I encourage you to use. I've done it in workshops in 4 hours. We've done it in 2 weeks. You want some time to process it. So, that's what I point out a bit. And it's designed to be simple yet all-encompassing and actionable algorithmic strategy. Not just saying, hey, we're using social channels, but we're going to use social channels to publish this content on these days of the week, and these are going to be major updates throughout the campaign, compliantly. We are going to run these social ads to these audiences, anticipating the same type of metrics we looked at for cost per click and conversion, all the way through. These are events everywhere. Investors are not interested in what was done before, but what you're doing now and where you're going. Jazz, anything to add to strategy? I know we talked about planning a little bit, but what notes do you want to make sure viewers are jotting down as well?
I think it's a mindset, and it's funny because I saw my dad, who was a Marine, really live this out, and I wanted to write it down, but I believe that there is a freedom in being prepared, right? There is a freedom in being prepared. And so what I mean in saying that is, I look at the case of 2 founders. One founder who's done all of their market research, who has all of these different check marks that are ready to go, right? Like, we've done the strategy. And in battle, in business, things happen that may or may not have been on, the expectance. Like, they weren't things that we expected. But being able to, one, have a plan on what you wanted to follow, and then being able to veer from the plan is so much better than someone else who is like, okay, today is Wednesday, July 31st. What am I supposed to post for content? Or who am I supposed to email today? And I think that if we look at, raising capital in this same way, whether it's life, raising capital, business, it doesn't matter. I believe that you have a 10 times more freedom once you already have the plans laid out for you, as opposed to being the other founder who, it figures it out 10 minutes before they decide to take action. So the thing I wanted to leave is, there is a freedom in being prepared.
Absolutely. Now, going back to this deck here, and I have about 20 minutes left. I'm going to fire through some of these pages, but does the state of development influence campaign timing? Product service ready to go, shows you're further along in your journey, gives more credibility and trust to the team and offering, can emphasize traction, revenue generated, testimonials, case studies. In the works, early stage companies can still find success. We've had clients with 3D renderings with no product that can raise significant amounts, and you've seen them do well. All depends on the presentation, the community hype, the third-party validation. What you're really playing for here is the crowd effect. So, you have a few people you're able to point at in the pool and showing more that are jumping in. And, when it's a full pool party and people, having a good time around as well and showing positivity, it's much more attractive. It's much more desirable. It's much easier to get cold audiences to participate in that type of community. So it's really what we point out more. Yes, ready to go gets a lot further for us. But at the same time, look at the crowd effect, look at social dynamics to determine how you're going to do a crowd sale. Danny, what are the best ways to present an offering based on what we're seeing here on this page?
Yeah, so going into a few things a little bit farther back as well, they say there's no crowd fund without a crowd. So build out your social media presence, look established, don't look like you just started your Facebook page 2 days before you went live. You want to look like you are established digitally online. That's going to help you out with your launch. It's going to help you out with people that are searching for you, searching your offering. Um, your offering page is your converter. That's what's going to convert the audience, especially for Reg CF with a lower minimum investment. That's where you can scale. Reg D's usually lead gen conversations. Reg A pluses, we usually recommend IR, sometimes with Reg CF as well, but that's not scalable. If your offering page is converting at a good rate, we could literally scale the advertising while scaling the investments coming in. So you want to make sure that your creative is on point, speaking to the investment opportunity, top reasons to invest, and business momentum, raise momentum, industry momentum, founder momentum. They're investing in you. Let's say you're on a podcast, you're at a speaking event, that's showing progress. And you want to test variance as well. That's a little later down the line in advertising, but these are all components to test, optimize, and scale, and finding out what audiences, what is resonating best with your offering on a creative level, as well as that audience level to scale your campaign.
And we're talking about the 313 method on this page as well, too. That's breaking what you do into 3 sentences, that then into 1 sentence, then into 3 words. So you could see even just, on the examples to the right here, transformative AI tech for the health revolution versus FDA-approved dementia tech impacting 10 million Americans. Vague, it doesn't provide any real information versus including traction, market size, and more context. Don't forget pre-launch marketing, create an online presence and grow your audience sooner than later, as Jazz and Danny emphasized. Get people hyped about what you're doing before you even go live. No investment talk, but dive into brand awareness and how you're making a shift in your industry. If you have a delay of 6 months, 12 months for your launch, whether it's, timing your launch for whatever reasons, or delays in the paperwork, let's say it's for Regulation A+ filing, which commonly carries delays, you could be building your audience and have that much more listening, awareness, individuals following what you're doing, showing up and likely performing in those early stages. Jazz, what are some common pitfalls?
Common pitfalls that I see are lack of audience. And I love this page right here, but it says companies are more focused on going live than how how they're actually going to reach their goal. And so in saying that, for me and how I look at it is this pre-market or this pre-launch strategy. Like I think we keep circling back to like the important parts of this deck, and strategy is potentially number one, right? So what is the audience that's coming in? How are you communicating with this audience once you are live, right? I see so many issuers and we ask the same questions. Hey, are you guys updating the audience via email? Or are you updating this audience social? Are you doing your weekly portal updates? And 8 out of 10 issuers don't even know that they can be updating their audiences with the portal updates. And it's one of the best ways in order to just see people who are already connected or who are already interested in the raise, and just being able to communicate with them saying, hey, look at what we just did. Look at this podcast that we were on. Oh, we just got put in these amount of stores, or whatever your product is. I believe that keeping them updated within the raise is probably one of the number one things that you can use to not fall into these pitfalls of not communicating with the audience. So
Danny, what would you say to a founder that's considering stopping all marketing efforts? maybe because the holidays are coming up, maybe because their campaign's moving slow, maybe because there's an election coming up or escalating current events that could impact markets. What would you state? How would you like to, shape their thinking?
I would consider how far they went to get where they're at, how much time, effort they invested just to be where they're at. They're on a portal, they pay portal fees, they pay legal fees, they're using a back-end software, there's costs involved with that. There's historically going to be slow times to these raises. Most of them aren't consistently seeing consistent momentum. But I think you just got to go in there being prepared for it, have some of that thick skin, and marketing is all about testing. So what can we test out new? What can we change out? What can we show that shows movement, progression? Where is the analytics telling us performance dropping off? Is it the ad creative? Is it click-through rate low? Is it CPM too high, cost per thousand impressions? That means we need to separate the audiences. Is the offering page, all the traffic coming in great, but traffic's dropping off at the offering page. It tells us the offering page, something's throwing them off there. There's metrics we can see that tell us where performance may be dropping off, and we can continue to test. We can A/B test 2 different offering page variances. We have 5 to 10 different audiences, different creatives going on at all constant times. We want to continue to test, crack the code. We've had campaigns that saw slow months, saw the best month the following month because we continue to change things up to crack the code. You need to have thick skin. This type of raising is not for everybody. You need to know going into that there may be some slow times, but you don't want to give up. You want to continue to push, and the audience is following that with you. They're watching what you're doing. So you want to be able to be consistent with your messaging and consistent with what's working. And if something's not working, look at the data and tell you what's not, and continue to test so we can find that way to crack the code.
Absolutely. And any slowdowns to traffic, any slowdowns to your marketing could affect the audiences that are in your funnel. They may not convert at all if they're not brought back with future marketing. If there's a gap and a month, 2 months goes by and they see an ad out of nowhere and they get to your offering page and you have a similar amount raised, it's likely going to have a counter effect versus keeping them coming to the deal. Not allocating adequate budget is another pitfall. Companies typically spend 10% of their total raise on marketing when successful. Even though you're live on a portal, that doesn't mean potential investors know. Portals will promote your campaign when you hit various milestones. They have to treat every issuer the same, but you can still bring people to your deal. And if you're getting more investors from your own marketing, it's likely the audiences that see you on a portal will pay more attention and convert at a higher level. That may then resonate with people that you're bringing in, and the ones that are on the fence. It's 2% you're playing for to convert. The other 98% are not going to, but you can get to 3. You can get to higher amounts. The majority still won't, but you can get to larger levels. It's really a rising tides lifts all ships type of mentality here, where you get a big financial email newsletter to publish you, get a lot of investments in a window of time afterwards. The portal's audience sees that they're more interested in getting on board. The advertising traffic, the content traffic, your first screen networks then participate at higher levels. So this is an average metric. We've seen it, much lower percentages of cost of capital. I would say cost of capital is not the focus in the initial stages. It is once you're seeing results. First, you need to, prove that your page converts, prove that marketing channels are producing for you. And then as you're ramping up, can look for efficiencies. What are we looking at here, Jazz?
As I said, man, not allocating enough time. So issuers believing that, they can raise the max in 1 month or even 3 months is rare. As Danny loves to say, these are marathons, not sprints. And I think it's, truly that, right? Like, to think that, in month 1, new raise, you guys will be able to reach the full 5 million. This is a very tough battle. Not saying that it's impossible. I know Danny's spoken about some of the campaigns and clients that we've been able to work with who've seen some of these things, but as he says as well, these are top converting campaigns. So I love to look at it from a perspective point of saying, hey, these things are rare, like walking them through that journey and just letting them know that it isn't as easy as it looks. So I think that's the most important thing to realize here.
Patience you must have.
I love Yoda.
Yoda knows. Danny, you talked a lot about focusing on product, not the investment opportunity. What do people need to know?
Yeah, so it all starts with the video. I recommend a minute and 30-second video picturing going over what's in your pitch deck. Having energy. If your founder doesn't have that energy, have someone on the team that is in that video that has that energy. We'll take smaller versions of that for ads. You need to have a good top reasons to invest at the top of the page with numbers. You want to make sure the offering page is less text heavy, more graphics, because a lot of this traffic's mobile. We want to make sure it's representing the market opportunity in a way that the audience can understand, a broad audience, meaning let's say it's a medical product. It shouldn't just be medical language. It should be a little broader so broader groups can understand why it's important to invest in it. Value proposition, what separates you from other groups is a really big key indicator. Traction, did you guys have a previous raise? There's ways to have the numbers in there as well. A lot of founders I talked to didn't know that. Even some that had a previous crowdfund raise that did well. There's ways to add those numbers in there, even in the ads in a compliant way. Milestones, business growth, industry growth, founder growth, raise growth. As you hit milestones in your raise, you definitely want to be representing that. Leadership experience. They're investing in you versus your product or your service. So you need to keep that in mind. The founders more campaign facing tend to see higher results and goals. As you reach these different goals, you want to definitely represent that into your messaging. And you can show how you did that with your roadmap, through your whole storyline, your content marketing, your social medias, your brand voice around the investment opportunity. The ads are the traffic driver. They both go hand in hand. You can have a group like us advise on it, take both of them off your plate. But if there's not good, consistent content showcasing this and the ads are running, ads are not going to have a chance they nearly could have if this is all presented on one, the offering page, social, and the ads.
So, as Danny's mentioning there, this is what you want to focus on. And, going back to all the pages of starting with strategy, looking at the pitfalls, looking at what you're doing before the campaign. These are the questions you want to be asking yourselves. Not, hey, should I hold off a few months? The most precious resource here is time. Showing a few examples here. Avadane, we've talked about on some past webinars. They're just such a great example. They went live in February. They were live through October. They went through many difficult points of the year there. They had slower months, but it all culminated in their final periods. I could tell you it took 4 months to hit the first $1 million. Took 2 months to hit the next million, to hit $2 million. It then took only a month to hit the third million. And then in the last 3 weeks, they did another 1.5 million to hit 4.5 million, 4.495, and could not offer more than 4.5 million. They had a lot of inquiries afterwards, but could not go beyond that point. So timing, 8 months, I think is a lot more realistic than 2 to 3 months. Beginning with that period and scaling from there, absolutely. it's not working at all in 3 months. You've made extensive optimizations to your marketing efforts and marketed that whole time. I would still move to a closing and look to get audiences that are on the sidelines versus than just, calling marketing off. And for me, I'm a marketer, I'm a problem solver. It's a matter of pivoting and managing to a point of effectiveness. But there are plenty of periods here that other founders would have stopped. They would have stopped efforts. They would have stopped, marketing. And, we questioned it at many points. I could tell you in August, leading into 2 million being hit, there were question marks on whether, we should make recommendations to close early. Continued marketing, and another 2.5 million came out of it. So, the founder at Avadane, who I really point at for the success of this campaign. We're just working on behalf of founders. It's you guys who are creating the companies, creating the products, creating the raise itself. Brad at Avadane brought in, large investments throughout the process, and then we would see the advertising spike in performance throughout that. Spoke at many conferences, was featured by different publishers, all on his own. The ads showed an excellent return on ad spend, but it's a group effort. It's a collaborative to get there. So as Danny was saying, the most successful campaigns have the most proactive founders. That is very true. And again, speaking to the timelines here, there are a lot of learnings. Again, you stop a few months in on this campaign, you're under $1 million. By staying live for longer, by doing all the things mentioned in this deck, you can have a much more impactful round. Just speaking to Atom Beam for a moment here. This is a campaign from last year. They're actually live right now and have over 3 million, raised within a week of launching the Regulation A Plus. But that was not a 1 week. That was not an overnight success. More of a pre-launch going into the round and then getting reservation holders to convert. Many quarterbacks, coaches in the industry, consultants say not to do a pre-launch, and 10% of reservations may actualize into investments. Charles and the team at Atom Beam have seen much stronger responses. Charles is amazing at putting together, government contracts and partnerships of all different sizes, deals. His technology, his traction speaks for itself. And, we've seen growth accordingly. We've seen it happen on the Reg CF campaigns. This is a 12-month push to raise 3 million on the last Reg. Actually, wasn't the last Reg CF. They did another one at the end of last year that did 3 million in a much shorter window of time. So it's about maximizing what you're doing within your time windows. So can open it up to questions. Danny, any final thoughts that you want to add here?
Yeah, I just want to add one thing. So, in regards to Atom Beam, he continues to market in between raises. He doesn't stop. Commonly, I find issuers, I'm done with my raise. I'm going to focus on product. I'm going to go quiet for a little bit. He continues to do webinars, continues to build his audience. He continues to push in between his raises, and it resonates. He is one of the top raises right now on Start Engine to date from what Start Engine shared on their Reg A Plus. Just went live. It's over 3 million. And my hat goes off to him on it. We're an extension of him, but he continued to push, continued to show movement, traction, didn't stop in between raises. And that's a big product to where he is right now in his raise. So keep your audience engaged after your raise. You're going to continue to do this. They're your army for you or your army against you. If they see an ad saying invest again and they don't know what's been done with their previous funding, we commonly find question marks in the ads and even potential trolls. So I would take away that campaign as a reason to continue engaging your audience even after your raise and ongoing.
Sure. So as Danny's saying there, audience and focusing on that for versus the timing of your raise. ran out of time for questions, but encourage you to send LinkedIn invites to Danny, to Jazz. Can reach out through our site as well too. We're an open book in terms of what's working and not working in terms of marketing on these campaigns. Jazz, you want to leave the audience with a 10-second recommendation here?
Um, hmm. I would say the main thing is similar to that quote I made earlier, man. There's a freedom in being prepared. And so I think that is my quote of the day. I always try to come up with one for myself, but there is a freedom in being prepared. So the more that you can be prepared going into the raise, as we've seen with Adam being actually being the fastest to raise 3 million on Start Engine, which is crazy to say. And I think that's just a testament to their preparation. It's a testament to their strategy, and just how they've gone about prepping their audience. And so I think there's a lot of successful clues that could be followed here. And I think it's just a matter of putting these things into practice. So I'm glad I got my first one in though, Jason. I'll tell you, man, this was nerve-wracking, but cool. This is awesome.
So
Did a great
answering
job,
a few
guys.
questions here. Again, feel free to contact us directly. Welcome a warm marketing chat anytime. Danny, Jazz, thanks for being a wealth of information here. True thought leaders in the space. And we'll see everybody next month for our next webinar. Take care.
All right, guys.